Hey everyone, this is Mike DeBliss. The topic of this podcast is choosing the right business structure for your new business. When it comes to deciding what the best business entity is for your small business, the question that is usually top of mind for entrepreneurs is what's the difference between an LLC, a limited liability company, and an S corporation. So I want to walk you through both and basically explain the differences between the two, because you might be surprised to learn that an S corporation isn't a legal or business structure per se. Instead, it's an alternative tax option for corporations. But let's begin with the definition of an LLC. An LLC, or limited liability company, is nothing more than a legal entity that is similar to a corporation. It limits the business owner's personal liability, and it's flexible when it comes to tax treatment. The owners are classified as members, not shareholders, and an LLC may be owned by a single member or by multiple members. Another feature of the LLC that makes it appealing is that it can be either member managed or manager managed. Now, a member managed LLC's daily operations are undertaken by the owner or owners. However, in a manager managed LLC, the owners designate a manager to take care of the day-to-day business operations of the LLC. So let's get down to brass tacks. How does the IRS treat an LLC for tax purposes? Well, the IRS treats an LLC as a disregarded entity for tax purposes. I realize that disregarded entity might sound foreign, but to simplify it, it means that the LLC receives pass-through tax treatment. In other words, an LLC's profits are taxed as personal income on the member level, and the owners are directly responsible for that tax obligation. So the business itself does not pay income tax, and that might come out like a neon sign if you have investigated a corporation as a potential entity for your small business, because with a corporation, the corporation is considered a creature in and of itself, and so the profits are taxed at the corporate level, meaning at the corporation level, and then when the profits are distributed to the shareholders in the form of dividends, the shareholders have an obligation to report that on their tax returns and to pay the corresponding tax liability that arises from the dividends. So unlike the corporate structure, the LLC itself does not pay income tax. Now, there are some drawbacks and when it comes to an LLC, and one of the big gripes for owners is that all of an LLC's profit is subject to the 15.3% self-employment tax burden. However, an LLC has another option, which is perhaps hidden if you haven't done a little bit of research and digging. And this other option can actually mitigate the harsh impact of the LLC's profits being subject to the 15.3% self-employment tax burden. And now that's a perfect segue into an S corporation. And you'll see how the two relate and how an S corporation election can mitigate the harsh consequence of the LLC's profits being subject to the 15.3% self-employment tax. So what is an S corporation? Strictly speaking, an S corp is not a business structure. I can't tell you how many times clients have walked into my office and mischaracterized the S corporation and wanted to form an S corporation. It's not a business structure like an LLC or a traditional corporation. Instead, it's an alternative tax option for corporations. Now, initially, this might seem like a distinction without a difference, but bear with me. An LLC can elect to receive S corporation tax treatment. And here's how. By filing for S corp status, this means submitting IRS Form 2553, an LLC's profits will continue to flow through to its owners. So nothing changes right yet if the LLC elects to be treated as an S corporation for its tax treatment. However, and this is where you want to pay very careful attention, only wages and salaries paid to the owners will be subject to self-employment taxes once the S Corp election is triggered. Essentially, profits distributed as dividends are not subject to self-employment tax when the LLC elects to be treated as an S corporation for tax purposes. Now, keep in mind that in a regular LLC, profits distributed as dividends are subject to the self-employment tax. Therefore, an S Corp election can reduce the amount of self-employment tax an LLC owners must pay. So that is the advantage that can be gained by electing S Corporation status for your corporation. The reduction in the amount of self-employment tax that an LLC's owners must pay. So just to recap here, recall that if you select S corporation status for your LLC's profits will continue to flow through to its owners. However, only the wages and salaries paid to the owners are subject to self-employment taxes. The profits distributed as dividends are not. That's the distinction between a traditional LLC and an LLC that has elected S corporation treatment. So in the traditional LLC, the profits distributed as dividends are subject to the self-employment tax. But with the S corporation election, the LLC can reduce the amount of self-employment tax that its owners must pay. So if you find the S Corp tax option appealing, here's what you need to know in order to elect it. And that's basically the jargon that the IRS uses, electing S corporation tax option. In order for your S Corp election to be effective for the current tax year, your LLC must file Form 2553 no more than 2 months and 15 days after the beginning of the tax year. So, as I'm sure you're probably lamenting, as it's now April 17th, if you have not yet elected S corporation treatment, it is too late for the current tax year. So let me give you a quick and dirty example. An LLC with a tax year that began on January 1st, 2018 had until March 15th, 2018 to apply for S Corp status for the 2018 tax year. All right, so keep in mind that rule, that hard and fast rule, that you must file Form 2553 no more than 2 months and 15 days after the beginning of the tax year. That's why in this example, where the LLC has a tax year that begins on January 1st, 2018, the LLC had only until March 15th of 2018 to apply for S Corp status for the 2018 tax year. If you missed the March deadline, and again, today is April 17th as I'm recording this podcast, I still would encourage you to talk to your tax professional because there may be a backdoor way. However, the Form 2553 instructions are very firm about this 2 month and 15 day rule. There are no exceptions insofar as I can tell. So you might simply have to wait for the next tax year. And speaking about the IRS's instructions for 2553, specifically they state the 2-month period begins on the day of the month the tax year begins, and ends with the close of the day before the numerically corresponding day of the second calendar month following that month. If there's no corresponding day, use the close of the last day of the calendar month. I realize that that just seems like gobbledygook. But to distill all of this, a new LLC that wants to apply for S-Corp election must file no more than 2 months and 15 days after its date of formation. A business that wants its S-Corp election effective in 2019 can file virtually any time during 2018. To learn more about these filing deadlines and the eligibility restrictions and other details, I would encourage you to visit the IRS website and talk with a business tax advisor. You may also want to consult with a tax attorney to ensure you understand the legal responsibilities before making a change. There are so many nuances involved in this that it's very difficult to cover everything in such a short podcast session. So in an effort to dot all your I's and cross all your T's and be informed of all of the nuances that that are part and parcel of making this selection, I would strongly encourage you to reach out for a tax attorney or business attorney and have a consultation. It is so important that you be well informed when you make this very big decision as to what business structure to choose for your new business. And we've just scratched the surface of this, as there are issues that relate to liability that you will want to be wary of when you make this decision, and what business structures are best for reducing liability, and of course, the issues that are pertaining to the tax liability and the tax savings that exist when it comes to selecting the S Corporation election. If you have any questions, my door is always open. Feel free to shoot me an email at mjdebliss@deblisslaw.com.